everyone, welcome to Business Television India. I'm Hiral Desai and you're watching Build Your Portfolio, a show in which we focus on fundamental analysis of stocks to help investors pick stocks on the basis of their strength for medium to long term. First up, let's put the spotlight on Cosmo Films. In fact, the company posted a strong quarter with net sales jumping by 22%. However, a sudden sharp fall in raw material prices in the month of December led to an inventory loss as well. To discuss this in detail, joining me is Pankaj Podar, CEO at Cosmo Films. Welcome to the show, Pankaj. To start off with, firstly, with the way the numbers have panned out, good growth coming in terms of the top line. However, the numbers with regards to margins as well as in terms of the EBITDA have been slightly muted. We do understand a couple of reasons on that front, but what is the trend looking like going ahead?
Yeah, so thank you, first of all. The trend, has already started to reverse from December, as we made in our announcement. So, for until November, the prices went on going down, and we were able to do better on the export side, while the domestic was quite suffering. But I think now demand and supply is getting quite evenly balanced, and demand growth is faster than supply. So we expect this to carry forward in the quarters to come. So things that way should get better.
Okay, so things expected to get better going ahead. So then, if you could just help me understand, now that we've seen a margin of around 7% during this quarter, 8% is what we've seen in the third quarter of FY18. If things are getting better, can we expect double-digit margin growth?
Yeah, I think that should be possible. We used to do, always double-digit numbers, and now with domestic margins also getting better, I think it should be achievable in the times to come.
Okay. Apart from that, the domestic film margins, they have continued to decline until November. However, as you mentioned that the trend has been reversing, there has been a one-time gain of 8 crores from sale of land and building in US subsidiary, which boosted the EBITDA. This will not be present in the coming quarters. So are you able to maintain that run rate of around 35 to 40 crores at the EBITDA level?
Yeah, we should be able to improve from here. Obviously, last quarter had one-time inventory losses. The other thing is that US, we have discontinued the manufacturing there and shifted the machines to India and sold the land and buildings. So this is also going to be very positive for our US operations. We have been quite successful in shifting those products to India, and therefore the cost should come down, and we should be able to do a better job out of India to supply to US market.
In terms of where exports versus domestic business is concerned, what is the breakup looking like currently, and by how much will that also change?
Yes, so right now we do almost 55% of our total sales in exports market, and exports continue to perform better for us than the domestic market. Obviously, in exports, our focus is more on specialty sales, and therefore we will like to maintain that quite significantly. And as we move along, we expect that the domestic margin should improve, and so is our continued focus on specialty sales.
Right. All right, Pankaj. Pleasure speaking to you, and thank you for sharing that update as well. So FY20 expected to be a better year in comparison to what we've seen in terms of FY19. The stock is down over 3% as we speak and trading at the day's lowest levels. But if we can just quickly pull up a YTD chart as well to understand the kind of performance that we've seen from the counter, because clearly there were headwinds at least, going on. But therefore, 21-22% is the kind of cuts that we've seen in the year 2019 itself. So let's see what the year, that will be going by looks like as the management has indicated. But moving from Cosmo Films, after